Hello everybody, hope you all are doing really well. This is CA Agrawal, your faculty for ACCA, AA and AAA subjects. My friends, today we are going to revise chapter number 11 from your AA syllabus, which is fraud, laws and regulations. My friends, this chapter is going to be very important for you while you prepare for your AA exam, because this chapter is definitely asked in the examination. Now, what all standards do we cover under this chapter? So we cover two standards, ISA 240 and ISA 250. When I say ISA 240, the auditor's responsibilities relating to fraud in an audit of financial statements, and when I say ISA 250, I mean consideration of laws and regulations in an audit of financial statements. So these two standards are there that we are going to cover. Now, what all are the topics, headings that we are going to cover under this standard? So definitions, that is the definition of error and fraud. Then we will be going for the discussion on types of fraud. Then we will be going for the discussion on management's responsibilities and auditor's responsibilities for fraud. Then we are going to discuss about the risk assessment procedure, that is what all risk assessment procedures could be performed relating to fraud. Then we will be discussing about communication with management and those charged with governance. This is completely different from that communication that is required for the deficiencies in internal control. Then we are going to go for the discussion on resignation from the engagement, when auditor could resign from the engagement, and this is how we will be completing ISA 240, and then we will be going for the discussion on ISA 250. When I say ISA 250, we are going to go for the discussion of laws that have direct impact and laws that have indirect impact. Then we are going to go for the discussion of management and auditors responsibilities. Then we are going to discuss about indications of non-compliances, that is what all events could suggest us that there has been some non-compliances, and then we will be going for the discussion of what auditor needs to do when the non-compliances are discovered, and finally we are going to discuss about the reporting responsibilities. Once we cover that, we will be done with our discussion on ISA 240 and ISA 250, that is we will be completing chapter number 11. So I hope this is very clear and this is very understandable for all of you. Now let's discuss about each one of them in detail, okay? But since we are going to revise it, so we are going to be a little quick, okay? So whenever you face that there has been a requirement of little more explanation, please feel free to reach out to me. Now where you can reach out to me? You can reach out to me on my Telegram, on my YouTube, or on my Instagram, all on the same username, which is ACCA with CA Agrawal. So the username is similar, ACCA with CA Agrawal, and you can reach out to me and discuss your queries. Will you get this file of notes? Yes, you will be getting this file of notes on my Telegram channel, which is again ACCA with CA Agrawal. Will I be coming up with new revision videos for other topics as well? Yes, I will be coming up with a lot more revision videos for your AA as well as your AAA syllabus. So please stay connected to this YouTube channel. Okay. Now let's start quickly. So definition of error. What is the definition of error? Unintentional mistakes. Unintentional mistakes in FS, including omission of an amount of disclosure. That is, if it is an unintentional mistake, it should not be intentional mistake. Okay. Unintentional mistakes in FS, and omission is also included as an error. That is, omission is not considered as a fraud, it is considered as an error. Okay, unless there has been an evidence that it is done intentionally. Okay. Now fraud is an intentional act by one or more individuals that uses deception in Hindi we call dhoka, deception, to obtain an unjust or illegal advantage. That is, it should be intentional act, it should be done with the purpose of deception, via deception, and to gain the unfair or illegal advantage. Now, as part of the planning procedures, key engagement team members should discuss the susceptibility. What is the meaning of this word susceptibility? What is the meaning of this word susceptibility? So the meaning of this word susceptibility is exposure of FS to material misestimate due to fraud. That is, when performing the planning procedures, the key audit team members should discuss that what is the exposure of these financial statements towards fraud. Okay. Now, types of fraud. So there are two types of fraud. One is fraudulent financial reporting, that is playing with the books, manipulation of books, and second one is misappropriation of assets. Now this could be the assets which are in the form of, say, debtors, or it could be the physical tangible assets also, like inventory. For example, we took one example of a watchman who used to steal one chocolate from the warehouse of a company and for his daughter. Now this particular watchman was doing what? Misappropriation of assets only. And we also took one more example where one of the accounting head was doing what? They used to collect the debtors amount, but they used to collect it in cash, and they used to write off, instead of booking this cash against that particular debtor, they used to write off the debtors, they used to mark it as bad debts, and they used to take this money into the personal bank balance, okay, or personal receipts. Okay. So fraudulent financial reporting involves misstatements or omissions of amounts or disclosures intended to deceive users of financial statements. In involves misstatements or omission which is intended to deceive the users of financial statements. Now one question comes to the mind of a student is why omission is covered over here. Omission was an error, right? And it is types of fraud, but this is intentional. That is why this is covered as omission of amounts is covered as what? Fraud, fraudulent financial reporting. Okay. Now includes manipulation, falsification, forgery, alteration of records, misrepresentation, intentional misapplication of accounting principles. That is, if you have intentionally misapplied accounting principles, for example, if the requirement was to apply FIFO but you have intentionally applied LIFO even after knowing that this would not be appropriate for the entity, then also it would be covered as fraudulent financial reporting. That is, it would be covered as a fraud. Okay. A risk of fraud in revenue is presumed. That is, revenue recognition is always considered as a significant risk as well as a fraud risk, and auditor needs to respond appropriately to it. Okay, and if not, then reasons needs to be documented that why in this particular case revenue recognition is not considered as a fraud risk, because it is always presumed that management will definitely try to manipulate the revenue part, and that is why it is always considered as a fraud risk. Now let's talk about the misappropriation of assets. So involves theft or misuse of company assets, like we discussed about the cash theft and we discussed about the stealing of one chocolate every day, right? So both are examples of misappropriation of assets. Includes embezzlement as in the stealing of money, stealing physical or intellectual property, like we discussed about the chocolate, using company's assets for personal benefits. In some cases the employees might use the company's laptop or the company's car for personal use also. Payments without receiving goods or services, that is, sometimes payments could be processed to certain people without getting the goods in return, and that is also part of the misappropriation of assets. This is not just accounting entry, this is actually outflow of assets from the company, right? Then more difficult to detect when done by management than employees, because management frauds are always difficult to identify than the one done by employees, because management has more power to conceal. Okay, now management's responsibility. What are the management responsibilities? So my friends, whenever we discuss about fraud, generally what happens is everybody thinks that prevention and detection of fraud is the responsibility of auditor. Anytime a new fraud is identified, everybody points out towards the auditor, that auditor should have identified it. But please try to understand, is it the primary responsibility of auditor to prevent and detect fraud? No, it is the primary responsibility of management. Then what is the auditor's responsibility? Auditor's responsibility is to just obtain reasonable assurance and to perform appropriate procedures to check whether there are any material misstatement due to fraud or error. Okay, so management responsibility. Primary responsibility for prevention and detection of fraud and error lies with management, and those are with governance. They must set the tone at the top by establishing a culture of honesty and ethical behavior. That is, there should not be any instances of fraud. They should be able to set the tone at the top, and they are responsible to set the tone at the top. They should persuade individuals at all levels not to commit fraud, and must ensure that the appropriate culture, risk management procedures and internal controls exist and operate. Identifying potential for management override of controls. Now what is this management override of controls? See, what happens is, a lot of times this could happen, that management themselves might ask the team members not to follow the appropriate procedures. Can this happen? Yes, management override of controls might happen. What is management override of controls? When management themselves try to manipulate the controls or try to non-comply the controls that they have themselves applied into the company. So management override of controls, when management themselves are not following the controls set for various processes. Now auditor's responsibilities. Everybody thinks that the primary responsibility of prevention and detection of fraud lies with the auditor, but is that true? No, that is not true. So to obtain reasonable assurance that the financial statements are free from material misstatement whether caused by fraud or error, this is also referenced to ISA 200 overall objectives. Do you remember? One of the objectives is to obtain reasonable assurance that financial statements, in fact that is the first objective, right? Now, not responsible for prevention of fraud or error, and this is the important point that you need to remember. See my friends, how these notes are going to help you. So these notes are created by critically evaluating every textbook that is there, and what I have done is I have summarized all the key pointers here that is going to help you to solve the MCQs as well as the descriptive questions as well. Now, auditor should consider risk or material misstatement arising from fraud and error when planning and performing the audit procedures and evaluating and reporting on results. That is, risk assessment procedure should be performed when risk assessment for fraud needs to be done. So when evaluating and reporting on results and planning and performing the audit procedures. Now auditor must be aware that risk of not detecting a material misstatement arising from fraud is higher than that of error. That is, risk of not detecting a fraud is more than not detecting an error. Why so? Because that is intentionally hidden. Fraud is intentionally hidden. Whereas when we talk about error, it is not intentionally hidden. So it is a little easier to identify the error. There's an unavoidable risk. There's always an unavoidable risk. This is some line that you need to always write in your examination. There's always an unavoidable risk that material misstatement resulting from fraud may not be detected due to inherent limitations of audit, because there are complex nature of audit procedure. There are complex accounting involved. There is complex nature of financial reporting involved. The nature of audit procedures is not of investigative nature. There is time and cost constraints, right? Now, risk assessment procedures. So what are risk assessment procedure? Understanding fraud control. That is, auditor should understand controls designed, implemented and maintained by the management to prevent and detect fraud. Then inquiries of management. What auditor should do? Auditor should inquire the management about, is there any suspected fraud that has been there, how the management responded to it, etc. So management's assessment of risk of fraud or control, management's approach to prevention and detection of fraud, and management's knowledge of actual, suspected or alleged fraud and the actions taken. That is, they should look for three things. They should inquire about three things. One is, what is the management's assessment, what is the management's approach if any fraud would be identified, and whether they have any knowledge. So AAK, okay, AAK. AKA could also be remembered here, also known as, okay. So inquiries of management could also be done. Now inquiries of those charged with governance. See my friends, ultimate responsibility is of the those charged with governance only, and if auditor thinks that management could also be involved into fraud, then they should inquire the those charged with governance also. So enables auditor to assess the entity's exposure to management fraud by understanding those charged with governance oversight procedure. If those charged with governance are actively involved in the management or actively involved in evaluation and review, then there are lesser chances of management fraud, because management also needs to report to those charged with governance who are actively involved into the business. What if I tell you that those charged with governance are not at all involved? Then you have to ensure that whenever you discuss about the management fraud, there are always higher chances if those charged with governance does not have the oversight responsibility or they are not involved. Now others of whom the auditor may make inquiries, so they can make inquiries of anybody, be it internal auditor, be it secretarial auditor, be it any of the experts. So may involve internal auditors, employees, legal persons, chief risk officer, chief ethics officer, etc. Classification of fraud risk factors. Classification of fraud risk factors. Classification of fraud risk factors. So these are classified as IPO plus rationalization. Now my friends, what happens is, generally people think that whenever IPO comes and anybody gets rich, they think that it's a fraud. So that is how you can remember IPO, fraud, IPO, okay. Although IPOs are not fraud, IPOs are very good deal, and a lot of people make a lot of money during IPOs. But what I'm trying to tell you is that it is the public's perception that IPOs might result into certain fraud. So that is how you can remember IPO, fraud, okay. Because mnemonic is not just important. How do you need to remember that mnemonic, and how do you need to relate it to the heading? That is also very important over here. So when I talk about IPO, I stands for incentive, P stands for pressure, O stands for opportunity, and R stands for rationalization attitude, okay. So incentive or pressure. Can there be incentive or pressure to commit fraud? When I say fraud risk factors, it means what factors could lead to fraud. So incentive or pressure, if there's an incentive, if there's a reward, or if there's a pressure to meet certain deadlines, for example for insurance companies, they have been given certain deadlines. Now they might commit fraud to meet those deadlines. Opportunity. When I say opportunity, that is, there are weaker internal controls. For example, in that case of watchman, if watchman is able to go inside the warehouse, take out one chocolate without being caught, then definitely there are more chances of fraud. So opportunity is there. And rationalization attitude, as in if there's a casual attitude of the management towards rationalization, that is, there has been some theft and management has not taken any action, that is called rationalization attitude. Is this important for your examination? Yes my friends, this is very very important for your examination, okay. Now, let's read this one line. Any risk of material misstatement due to these factors must be identified and classified as significant risk. Any risk of material misstatement due to these factors must be identified and classified as significant risk. For all significant risk, a specific procedure must be designed to minimize the risk of non-detection by auditor. Now, written representation must be taken from management, which is explained in ISA 580. Are we going to revise it? Yes, my friends, we are going to revise it, and I think we will be revising it in another 1 or 2 lectures only. Okay, now let's discuss about communication with management and those charged with governance. Communication with management and those charged with governance. So, what you need to communicate with management? So, communicate factual findings, if fraud may exist or fraud does exist. Report on a timely basis. What is timely basis? Depending on the professional judgment of the auditor. Level of management depends on nature, magnitude, frequency and likelihood. That is, if junior level management is involved, then you will report to maybe mid level management. If mid level management is involved, you might report to top level management. If top level management is involved, you might report to the those charged with governance. Report to a level above those involved or seek legal advice. That is, either report to one level above, or you can also seek legal advice if you are confused about whom you should report to. Report significant deficiencies in design and implementation of internal control to prevent and detect fraud. This is as per ISA 265 that we will be revising later on. Now, those charged with governance, what you need to communicate to those charged with governance? See, if fraud involves management, significant employees or others, then it should be communicated to those charged with governance, because if you go for the management fraud to the management, they will be saying yes, we know it, we only committed it. But if you go to those charged with governance, they might be able to take actions against it. Discuss NT. What is NT? Nature, timing and extent. Nature, timing and extent. What is NT? Nature, timing and extent. Nature, timing and extent of further audit procedures required to complete the audit. Report significant deficiencies in design, implementation of internal controls as per ISA 265, and report concerns about management's attitude to fraud and fraud prevention and detection. Now, resignation from the engagement. Resignation from the engagement. When auditor could resign? When the water has moved above your head, right? In Hindi we call sir se upar pani jana, right? So if auditor encounters exceptional circumstances, this is called sir se upar pani jana. Exceptional circumstances, that is, when auditor encounters exceptional circumstances, then auditor would be able to resign. So what are those exceptional circumstances? Management does not take remedial action for actual or suspected fraud, that is, there has been a fraud or there is a suspected fraud, management is not ready to take any action, then you can go. Indication of material or pervasive fraud. There's an indication of material that is significant and pervasive, which affects multiple items of the financial statements. Still management is not able to do it, or if management is even taking the action, then also it has affected multiple items of the financial statements. Now you are not able to report, and significant doubt exists about the competency or integrity of the management or those charged with governance. I hope this is clear. Now with this, ISA 240 comes to an end, and now we can enter into ISA 250. Okay. Now we can enter into ISA 250. Now when I say ISA 250, ISA 250 title is Consideration of Laws and Regulations in an Audit of Financial Statement. Consideration of what? Consideration of laws and regulations in an audit of financial statements. So there are two types of laws and regulations. Now my friends, there's a good accident spot that is there. There's a good accident spot that is there. What is that accident spot? Everybody says laws that have direct impact or effect, laws that have indirect effect. That is not true. That is not true. That is wrong. And a lot of people get their marks cut over this point. See, these are not laws that have direct effect, laws that have indirect effect. Read it again. Relate directly to the financial aspects of FS. That is, these are not direct laws. These are laws that have direct effect over the finance. Whereas, relate to operational aspects that have indirect effect. That is, this directly relates to financial aspects. This indirectly relates to financial aspects because it is directly related to operational effects. Okay, so I hope this is clear, that one is directly related to financial aspects, another one is directly related to operational aspects, and therefore indirectly related to finance. Okay, so it is not direct effect over finance, indirect effect over finance. No, that is not true. Second one is related to operations, and that is how it is indirectly related to finance. So that is something that you need to remember. Now for direct, form and content of FS, right? Industry specific financial reporting issues, for example, for insurance there is a specific standard, right? For agriculture there is a specific standard, for investment there is a specific standard, fraud, corruption, bribery, money laundering, taxation, these are all issues which will directly affect. But when I talk about indirect, operational license, for example, I do not have shop act registration for my institution, so this will not have direct impact over my finance, but this is an operational aspect which will have indirect effect over my finance also, because I'll have to pay fines and penalties. Environmental regulations, health and safety standards, if I do not meet health and safety standards, this will not have direct effect over my finance, but indirect effect over finance. Data protection, if I lose data of my students and if the data protection laws are breached, then I will have indirect effect, right? So this is operational aspect which will have indirect effect. Now let's talk about management and auditors' responsibilities. Management and auditors' responsibilities. So when I talk about management and when I talk about auditors, what are the responsibilities? See, for laws and regulations, primary responsibility should be of management, definitely. So to monitor legal requirements and ensure operating procedures are designed to comply with it. To design systems to meet legal requirements, to ensure employees are adequately trained and understand the code of conduct, to engage legal advisors wherever required, and to maintain a register of significant laws and regulations. Do you need to mug it up? No. But what you need to understand, that management should have the responsibility to understand the reporting, understand the compliance requirements. They should be able to decide, or they should be able to implement the procedures to comply with those requirements. They should be able to train their staff. If the staff is not capable enough, they can reach out to external parties also wherever required, right? And they need to ensure that every law is complied with. Whereas when we talk about the auditor, so determine effects of non-compliance on FS, that is, they have to determine that which laws will have which kind of effects, and they should focus on the significant effects one. To obtain understanding of applicable laws and regulations, that is, what all laws and regulations are applicable, then they have to identify critical laws and regulations which might affect going concern. For example, one of the environmental laws says that if you do not comply with the disposal requirements, for example, for a chemical industry, your factory will be shut down. Now, this is very important. Even if it is not directly related to finance, this will have direct impact over your company, because this will lead to going concern issues. So, to identify critical laws, to understand how the entity complies with relevant laws and regulations, that is, the procedure that management has created, they have to evaluate whether that procedure is sufficient or not, and to identify non-compliance with laws and regulations with their effects. That is, if there has been non-compliance of laws and regulations, what are the effects, and whether the provisions or the relevant accounting adjustments have been taken. Now, indications of non-compliances. What could be certain criteria which could tell us that there has been a non-compliance, that there has been a non-compliance. So, report by a whistleblower. Report by a whistleblower could be there. Report by a whistleblower. Who is the whistleblower? Who first informs about an actual or suspected fraud or ethical issue. Then investigation, then fines or penalties, then purchases at significantly higher prices, unusual payments in cash. If you are making unusual payments in cash, then also it could be an indication of non-compliance, that you are not complying with the laws and regulations. Similarly, purchases at significantly higher prices. If I say this remote is of 10 rupees, if I am buying it at 100 rupees, this could be a scenario, this could be an indication that I am overpaying for an item, which is I am routing money to other people. Tax evasion, if I am trying to evade the tax. Adverse media comments, media is talking adversely about you, negatively about you, then there could be some non-compliances. Now, non-compliance is discovered. What if non-compliances are discovered? Then how auditor needs to respond to it? Okay, so auditor needs to evaluate that how do they need to respond. So when non-compliance is discovered, the auditor needs to understand the nature of the breach. First of all, understand how significant it is, what kind of breach it is it going to impact the going concern assumption or not, the circumstances and the potential effect on FS. The auditor needs to understand whether potential consequences require amendment or disclosure. If yes, for example, certain provision needs to be taken, then they will be taking it, and are so severe to question whether FS are fairly presented. If yes, then they have to evaluate whether they should continue or not. Then when non-compliance is discovered, the auditor should document findings, discuss with management, those shall be governance unless prohibited, take legal advice, consider effects on other areas, and consider effects on management's integrity also. That is, if any non-compliances has been identified, what they have to do, they have to evaluate what are the conditions under which it has happened, what is the potential impact of it. They have to document all the evidences to it. They have to discuss with management and those traffic governance how they have missed out on this one. If it is allowed, sometimes it is prohibited, that if there is a fraud under which management is also suspected, you do not need to discuss the details. Then you have to evaluate whether, if management is also seeming to be involved, if management seems to be involved, then you do not need to discuss with them, and you also need to evaluate whether management has integrity or not. If not, then all other evidences should also be tested for reliability and relevance. Then reporting, how auditor needs to report. So identified or suspected non-compliance with laws and regulations may be communicated in the auditor's report, if auditor has a reporting responsibility to do so, and if it is a key audit matter. That is, identified or suspected non-compliance, identified as well as suspected non-compliance, identified as well as suspected non-compliance. This is also called as no-class, non-compliance of laws and regulations. So identified or suspected non-compliance with laws and regulations may be communicated in the auditor's report if auditor has a reporting responsibility to do so, or if it is a key audit matter. What is key audit matter? This we will be discussing under ISA 700 series. We will be revising it somewhere 5-7 lectures from now. Okay. Now, auditor may report to an appropriate authority. Auditor may report to an appropriate authority if required by law or regulation or relevant ethical requirements, if auditor has a right to do so, and if permitted by relevant regulatory. If required, that is mandatory. If right, that is they can and nobody could stop them. And if permitted, that is laws and regulations have not stopped them. So required by law, regulation or relevant ethical requirements if auditor has the right to do so, and if permitted by relevant laws and regulations, reporting requirements. With this, we have completed the revision of ISO 240 and ISO 250. I have tried to complete it in a very short time. Plus, I will be giving these notes to you so that you can revise. You can download these notes from my Telegram channel, which is ACCA with CA Supreet Agrawal. I'll write it again for you. Now, my friends, let me show you something. Okay, so if you want these notes, you can come to my Telegram channel, which is ACCA with CA Supreet Agrawal. You can come to this, okay, notes. Okay, if you want more revision videos, first of all, please like this channel, subscribe to this channel. Please like this video, subscribe to this channel, and please put a good comment over this video if you like this video, if this video was helpful, and if these notes are good for you. Please subscribe to our channel, which is ACCA with CA Supreet Agrawal. This is our YouTube channel. Okay, please look over it. Then if you are looking for question solving sessions also, that is what we do after revision of each chapter, that is we have done now, we will be solving questions. For question solving sessions, we have our crash course available for AA. How you can enroll for this? You can enroll for it in www.bbvirtualsglobal.com. For any other issues, please feel free to reach out to me on the given numbers that is mentioned in the description box. Plus, you can also feel free to reach out to me on Instagram. It is available with the same name, ACCA with CA Supreet Agrawal. Thank you so much, my friends. Say got it for audit. Thank you.